Coming to you from the Globesville studios in New York City, welcome to the Biz Show. I'm Mylan Studart.
And I'm Anaiti Solar.
And the Biz Show is bringing you all the news your pockets want to know. Last week, we talked about how to spend the money you saved wisely. Today, we're talking about credit cards. You're probably asking, why do I need a credit card? I barely have any income or money. Well, that's okay. You don't have to use your credit card when you get it. But having one is important. Here are 4 reasons why a credit card will do the adult in you some good. First, it starts building credit. Every person in America who has a social security number has a credit report and score. If you're not aware of yours, it's probably not activated, and it won't be until you started to build credit. Our next episode is actually all about credit scores, but for now, let's stick with this. Having a good credit score means getting the best terms on a car loan, a private student loan, and a credit card. It can even make a difference in getting a good apartment after graduation, because most landlords run your credit to know how well you pay your bills.
And second, it helps during emergencies. Let's say your car breaks down while you're on a road trip with friends. A credit card can be a lifesaver. Or maybe you need to fly home because a family member is sick. A credit card will be there for you. But be aware, new shoes, new clothes, and gadgets are not emergencies. Being responsible with spending is part of building credit and owning a credit card.
Number 3, it creates good spending habits. Having a credit card helps you make payments on time because interest and late fee penalties can be pretty high and hurt new credit holders like us students. Getting your first credit card will help you learn how to manage your credit, which is the foundation of your adult life after college. Again, be aware that putting purchases on a credit card is easy, and that can lead to out-of-control spending and large bill at the end of the month. And lastly, you learn how to read financial statements in fine print when you manage your credit card closely. By the time you graduate, you will be comfortable applying for other types of loans. Most credit cards keep track of your credit score, and you'll have access to that helpful information. That's how important your first credit card will be in your life. You will know what kind of interest rate you qualify for, how much in your credit lines you can access, and you'll be more aware of your finances. On the next segment of the Biz Show, we will show you how to get your first credit card. So stay tuned. Welcome back to the Biz Show. On this episode, we're talking credit cards. Now that you know how important a first credit card is to your financial independence, let's explore ways of getting your first credit card. You can start by getting a secured credit card, getting a cosigner, or becoming an authorized user on your parents' credit card. Anaiti, tell them what they get with a secured credit card.
A secured credit card uses a cash security deposit as collateral in case you don't pay your bill on time. That makes you a safer borrower to banks. You still have to pay interest and a minimum payment, but it's backed by your own money. The amount of money you set for collateral is the same as your credit limit. So if you have money sitting in a savings account, use some of it as your collateral for your secured credit card. It's the best way to start building your credit and learn how to manage debt.
Once you have a credit history, you can apply for an unsecured credit card, pay it off, and close a secured card account and get your deposit back. Here's your second option, getting a cosigner. Because you might not have a credit history, getting a cosigner is good because their credit is taken into consideration when applying for a card. Basically, if you can't pay your bills, your cosigner is responsible for you. This is why getting a cosigner or being a cosigner is hard, because you're responsible for someone else. So mom or dad is your best bet to help you start building your credit by getting you your first credit card. They might help because they know how hard it is to manage debt. Ask them to explain the perils and positives of owning a credit card. Having your parents' help is always good.
Now this brings us to becoming an authorized user. Your parents and other family members probably have credit cards and established credit. You can get your first credit card by asking one of them to add you as an authorized user to their accounts. Here you use the same credit account as your family member, but you get your own credit card. In this case, you will build your credit history, but you aren't legally obligated to pay for the charges. The owner of the account is. So make sure the card issuer reports authorized user activity to the credit bureaus so that you're indeed getting the benefits of building credit. This option will create both good credit management and spending habits. You give your monthly payments to the owner of your account to pay off your purchases and whatnot, so that your family member doesn't have to pay off any more interest rates. So, stay with the Biz Show. Next, we will show you who's winning at adulting, credit card edition. Be sure to send us your questions via Twitter, adding hashtag Globesville and the Biz Show. See you soon. Welcome back to the Biz Show, credit card edition. This episode is to show you how credit cards are a helpful way for college students to start adulting now. In the last segment, Mylon and I discussed 3 different ways for you to get your first credit card. So, if you don't have a credit card, sign up today. I say this because a big factor that affects your credit is the age of your accounts. The older your credit history, the better your score. And the better your score, the better your life will be after you graduate. Trust me, I know this from experience. So please, beware. You may think it's free money when you get your first piece of shiny plastic, but it's not. If you're not keeping track, these credit cards will come back to haunt you. Credit cards, Halloween edition. This week, I bring you the story of someone who actually was haunted by their credit card history. Fortunately, he used the same tips we're sharing with you today to shake the credit card ghost of his past. Mike O'Shea started college with just $25 in his pocket. He was a broke college kid just like us, so he signed up for a credit card at a campus fair. Now, even though he only used it for basic needs, he maxed out the $700 limit quickly, and he couldn't afford to pay it back. He then dropped out after his freshman year and couldn't afford to pay off his student loan debt either. So since he didn't have the Biz Show around to teach him about good personal finance habits, this credit card debacle continued to haunt him for 18 years. He couldn't get approved for credit anywhere. Life was a struggle, to say the least. But then things changed. He married Ashley, and now it was time to start adulting. His credit improved by doing these 4 things. First, he became an authorized user. Ashley added Mike as an authorized user on 9 of her cards. Since Ashley was paying everything on time, Mike's score got higher even though he wasn't using her cards personally. Second, he paid off his credit card debts. They got a loan from Ashley's parents, and with careful budgeting, they freed up the amount of available credit they had, which upped his score as well. Third, increased income. He got a better job that paid more. This, of course, made it easier to pay off the debt, qualify for higher credit limits, and increased his score. Fourth, after doing so well, he finally applied for his own credit card under his own name. So, if you're in a financial rut just like Mike O'Shea was, don't give up. It's never too late or too early to practice good financial habits. There are so many tools out there for you to take advantage of. For example, I recently downloaded the NerdWallet app and I've learned so much. Check it out, stay tuned, and start building your credit today. Keep watching for our next segment on credit card bewares. Ooh, spooky Halloween.
Welcome back to the last segment of the Biz Show, Credit Card Edition. In the opening of our show, we told you how important it is to start building credit with the help of your first credit card. But let's be real. It's easy to swipe your card for everything, and that can lead to serious debt and high monthly credit card bills. This is why it's important to learn how to manage your credit card well. So let's go through the cons of owning a credit card and what you can do to stay above the fray. Number 1, interest. The worst thing about credit cards or any type of loan is interest. We pay interest as a cost of borrowing money for an extra 30 days. A high interest rate, usually above 20%, can drag you into debt quickly if you only make minimum payments. Interest is added to your balance and compounds. In the end, you're paying interest on interest. But if you can't keep up, it will drag you into debt. That's why it's important to buy only what you can afford and pay off your balance in full every month. A common mistake about building credit is that you need to keep a balance on your card. You don't. Paying your credit card balance in full before the due date will avoid an interest charge and give you great credit. If you can't pay in full, keeping your balance under 20% will present you as a prudent borrower. But balances above 30% will give a red flag and can hurt your credit.
The second thing to avoid in credit card use is late fees. To avoid paying $25 to $35 extra dollars, make at least the minimum payment or set up automatic monthly payments. Racking up late fees can raise your interest rate and hurt your credit score because the banks see you as a risky borrower who can't pay the bills.
And the last thing, it's easy to swipe a credit card. You really need to keep track of your spending. Look at your monthly statements to keep track of spending and make sure to ask yourself if you can pay that purchase in 30 days.
We mentioned using credit cards during emergencies. So you need to tell yourself that buying shoes, clothes, food, and beer is not an emergency. Abusing your credit card can send your credit score into a downward spiral, and fixing it can take years.
That's right, and a missed payment is recorded on your credit report. And a delinquent account will stay on your report for 7 years, even if you resume payment. So 6 years from the day that you stop paying your credit card bill, lenders will still know that you bought too much makeup from Sephora and abandoned paying the balance in your account. We hope you enjoyed learning about credit cards on this episode of the Biz Show. Next episode will show you how to build your credit score. Getting your first credit card is the first step, so stay tuned next week when we give you the down low on what will raise your score and what will make it crash and burn.
Be sure to send us any financial questions you're dying to know the answers to, and we'll do our best to answer them. Tweet Globesville and add #TheBizShow.
Remember, if you like what you see, and especially what you hear, share us on Twitter, Facebook, and Instagram, adding hashtags Globesville and #TheBizShow. Here's to you, millennials, becoming business savvy in 2017. I'm Mylan Studart.
And I'm Anaiti Solar.
See you next week.